Good morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Thanks for stopping by today. I stream live Monday through Friday, 11:30 to 1 p. Eastern Standard Time, and this stream's about integrating Bookmap. This stream's about integrating Bookmap order flow tools with auction market theory using the volume profile in the intraday developing time frame, and it's based on structured trades that are available to everyone at no cost in the Bookmap Discord TraderLab chat, as well as a community of traders and a lot of additional education at no cost. We have a lot to go over today. Market is given a lot of opportunity, volatility, and of course risk. And we're going to talk about structured trades that you might have been able to participate in this market. And like everything, the outcome of everything in trading is always and will remain random. General disclosure, all Bookmap Ltd materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure, trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Please remember this is not a trade calling room, though I do post trades and situations that are developing, as well as levels to observe in the Bookmap Discord TraderLab chat, but none of them are trade recommendations. It is strictly for educational purposes to help traders understand how the market works, market mechanics, and then for the individual trader to find the process or conditional behaviors where they can extract statistical edge. So when these opportunities and risks show up, that if they have a statistical and vetted edge, that they might interact with the market participants. And then the outcome of any interaction or trade is random. However, in the business of trading, if you approach it very much like a gaming business, like the casinos approach their business, then you only will play games that have a statistical edge that favors you. And even though the interaction with these participants, just like with the casinos, with the gamblers, the outcome of each individual hand, or for us trade, is random. If you have an edge over a large sample size, and you have the ability to actually do the work, extract the edge, and then execute the edge when it shows up, in spite of your emotional state, which will interfere with your intentionality, whereas the casinos don't have an emotional attachment to the next hand, like we do to the next trade. If you can manage that, then you can absolutely realize your vetted edge when it shows up. The key, of course, is developing the confidence to be able to do this, overcoming the emotional stimulus, the fear, the run from the saber-toothed tiger thing that's worked really well for us, as a species, but does not work and is counterintuitive. And the word intuitive is what I'm underlining here. The intuition that protects us, the wiring. We're not wired to run into the burning building. We are actually wired to go the other way. So if you think about how you experience trading in your own world, in your own life, unless you are disconnected completely and you are emotionless, if you will, you're disconnected from your limbic system as far as the fight and flight thing, you're going to experience these things. TraderLab exists to help you put together the business of trading, extract structures. I share structured trades so you can extract statistics find the ones that you can dance with. Trading is very much not indicator based, though they have a place. It is about understanding market mechanics and then finding a way to put these pieces together in some kind of consistent process. So in a way, you create a trading system, but it's you. You are the system. You are the one who processes these inputs. And then it's up to you to throw away all the extraneous, miscellaneous, conflicting inputs and strip trading down to its most basic, mandatory elements to give you an ability to consistently execute. That is the way where you can find out if your consistent application, and I underline the word consistent, has a statistical edge. So you have to do the work. It's one structured trade or one setup at a time. And that's how you build a business, in my opinion. And remember, like everything, past performance is not indicative of future results. Now, today we opened higher inside of yesterday's range. Now, the market is bearish. However, it's Friday, and often, and I'm just going to tell you what I did today, and what's really interesting about today is the ETH, and I want to show you that because now, we had a big report, and all that going on, but this is kind of what, and I ended up initially taking longs, or not a lot of them. I think I took one, but I don't remember. I'll go over. I'll be able to see them. 52, this level here, 52.30-ish. I think this is it. In the ETH, we tested it like within a couple of ticks. The ETH low. So I was short, doesn't matter. I was short into that level in the ETH. I posted that in the TraderLab, but that's not really what's important. That's the overnight high. Hold on a second. Let me get back here. This. So the ETH low, unless all my levels are out of whack here. Yeah, is right there. Here, let me show it. ETH low. Okay, and this is called the naked volume point of control, 52.30. It was actually a target from yesterday. Who knows, right? This is part of the joy of trading. But in the auction, what we look at is where has the market previously found value? And if the market leaves it, it has the potential, if we, don't keep marching north, to come back and check it. So in the ETH low, and my short in the ETH was down to here. So I got out right here, so I'm thinking, that's pretty nice. And then we came all the way back, so it was like, well, maybe we've finished this auction. So I said, okay, now if we finish the auction, and it turned out that wasn't the case, by the way, but I don't know that because I'm not clairvoyant. That's a term for clairvoyant, not yet. So for me, it was, okay, too low. Now the market is short. We have the sellers in the market. We're short from yesterday. It's Friday. Potentially we'll see short covering. So that's how I kind of set myself up for today. And there's a little bit more. Yesterday's settle. The ETH mid. Let me just look a little further over here. And there was something else. Naked volume point of control. This was yesterday's highest volume. So let's look conceptually at this, and then we'll get into the actual market mechanics. But this is like an overlay before the market even opens, because what we're trying to do is align with participant behavior. And the market in itself, its function of the market is to figure out what's too high, what's too low, what's right, what's just right. Well, if this is too low, and then yesterday's high volume, same concept, was up here, we have the potential to come back to it. And there's another piece, the overnight volume point of control, which is in here someplace. Let me just see. Yeah, here. So if we're above the ETH retail price, we're above 52.30, and this is, I'm just giving you my thinking. Doesn't matter what I think. I'm just saying this is how I build a trade. And we're under here. So above 30, above the overnight volume point of control, which wherever that is somewhere, above the overnight mid, above settle, and this is retail. So coming in, I'm looking for longs to come back here. And I know it can test down, it could do anything. And then this. So this is my next target. So I was looking long for here. And if I get above here, to here. So just so you know. Okay. So for me, that was the first trade. So I'm going to show it to you. Now so everybody understands something. I trade a specific trade plan. And there are other traders who would not get long. There's other traders that get short. In fact, I saw a short, but I was in a long. And what happens to me is I am not quick to flip from one side to the other. When I see a change in behavior, I'm managing my current trade. So when I see a short, I don't go, oh, time to get short, I'm long. It's time to get out of the long. And then if I don't have a location, I have to wait. It's just me, you know. So that's just the way I work. So let's go take a look at this. So this is the RTH open. And this is a very dangerous place to trade. I always tell traders don't trade here. By the way, if you have questions, please post them in the Bookmap Discord chat, or hold on. Oh, thanks, Stephen. And if you're in YouTube, please post questions. There's a bit of a delay. One moment. Got to get situated here. Got to keep an eye on the market, of course. So this is developing volume point of control. Now, in the bearish leaning market, what might we get? Let's think about this. You open lower. We're above these levels. We open above settlement. It is possible that we're going to get that short squeeze. That's what I'm looking for. However, I see this, and there's a part of me, you know, the lunatic, and I call it Jekyll and Hyde. Hyde is the, let's put it this way, Dr. Jekyll, if you know the story of Jekyll and Hyde, it was kind of a dual personality, and Hyde was this crazy that was inside of Dr. Jekyll. Dr. Jekyll is professional, intentional, intellectual. Hyde is unbridled emotions, forget about anything else. And so Hyde, in me, wants to get long. So I see this and I'm going, but what do I know about the opening swing, the opening trade? The opening swing low is vulnerable, so I cannot get long. So what I'm thinking is it'll be much better to get this opening swing out. And this is what I talk about in TraderLab all the time. So this is the opening swing low. We come out, we pick it. So right here, I'm looking. Now, another hint on this thing is this right here. This is called VPOC migration. I'm going to label it. This is just process, okay, guys? I follow a process, and it's kind of, I developed it as a way not to forget what's going on. And if being a person who trades auction without indicators, I have to keep track of things, though. And what this is when the market opens, there's no volume. And as the volume comes in, this yellow line is called the developing volume point of control. All it means is where's most of the volume. And as the day starts developing, as the volume comes in, volume profile is measuring only price and volume. It's not an indicator, it's a measurement. So when you see something like this, it's showing you this is a consolidation, right? Here, let me just bring you back here. So right here, we open. This resets at RTH open, so it's a session volume profile. This is a chart volume profile. It allows me to zero in on just what's sitting on the chart. Now, initially, since they're all measuring the same thing initially, they're going to look the same. So high volume is like a retail price. It's very simple. And when you have a consolidation, it's a rotation. So the market tends to rotate. You guys know that. And the highest volume is right here. Here in this little fractal. If we move away from it, it is saying at the time, this is too low. So I'm going to label it. This is microstructure. And I start this way because I want you to see how the market mechanics work. Then we'll move on and we'll get into structured trades. Now, my structured trade might not be your structured trade. Which doesn't really matter, except, you know, it's just a matter of I just reviewed trades here. And, you know, some work, some don't. You know how it is. So when we break below here, it's too high. As soon as I see this, I'm looking for this. Why? There's going to be stops here. I see absorption here. this liquidity to buy iceberg, neither here nor there. So we see a buying iceberg here. I see sell stops, and I got selling icebergs up here. So it's bracketed. So let's just watch. Now, where's my locations? I have settlement. I have the overnight mid. So this is an area I'm thinking maybe to get long. Okay. I have this as a target above me, because it was the retail price from yesterday. And then I have the ETH high. So I'm just telling you, this is my trade. So I'm going for the long. And then looking to get short, which is the real funky thing about it. But I have to see. So when I get up there, assuming, we got to those targets, I'd be looking to see the behavior, the reactions, and then either fade it or just forget about it. So let's watch. Here is too high. Now here, I'm looking at it and I'm going, now here's mid and VWAP, too high. I did not take the short because I'm looking to get long. This is a short. Okay, let's just look at it. Now, I can't get short, don't forget. So it comes out and I'm going, well, mean reversion. It's two-sided trade here. So I'm looking at this and I'm thinking, well, this is too high right here. So my locations are down here and outside, but this is where I'm looking for my long. But this is too high. So what happened here? Broke low. Now, when I see this, I'm thinking short. Okay. But I'm not taking it short because I think we're going to squeeze. So I'm just giving you some sense of my thinking, not saying it's so good, but it is what it is. This is resistance because the price was too high and now the pricing is here and we left this. When we cross above, it changes the behavior for me. And right here, this turns into a long for me. See? To here. And I'll explain the rationale behind it too, if you're interested in that. And then this right here. Now, here's something that's interesting. This liquidity is sitting in the book, and I have my order sitting out because of statistics. By the way, there's a statistical probability, and I work, as you guys know, if you follow the stream, I just sort of go with statistics because it's all random. There's about a 69% probability that we're going to tag the ETH high. I figure that's pretty good, Also, I manage my trade. I trail my stops. So, because I'm clueless. So, and if anybody, everybody wants to look like they know what's going to happen, that they can predict. Me, not so much. I put myself out there before the fact. I don't just say, well, everybody knew it was going to go down and it's so simple and it's obvious, nothing to it. Anybody can say that. You guys hear it all the time. I don't do that. I also don't call trades because the real world of trading is if you are a quote trader and you're trading, depending on your time frame, you're going to be bobbing and weaving and attempting to stay in alignment and accept the random outcome, just like the casinos do. So for me, this is a qualified trade for a long. I take this trade, this structure quite often. And what really made it for me was this. And by the way, let me give you a probability for this thing. 67% probability to get here, you see? And that one, 69%. So that's why the longs, okay? Now you understand. Then over here was the last, so I'm trailing. So here you had sellers. They were absorbed. Sellers absorbed. I'm feeling confident. Now, not predictive, confident, because I'm seeing the buyers. Now I get the sellers here. I have nothing here. This is my support now. Notice where I come back. Now, this could be an ad subject to your plan if you're playing this. Again, I'm just talking about my trade. So now, as far as ads and all, I don't really get into that in the TraderLab. That's something that as someone develops, and if there's range and all kinds of other stuff, qualifications, this is an ad or not, I'm just saying it could be. And look what we have here. Chop, 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 break low, hold this absorption here, break high. So this is a place to trail a stop. We come up, we pull back here. Sellers are absorbed. This is a place to trail a stop. It's also a potential ad, and the ad may not pay, Now, by the way, if you add, the way I look at it, I'm just giving you a sense, if I'm going for this, I don't know where the high is or anything. This is my last swing. So you got to have range. What I'm saying is it's not an ad if you don't have range subject to your trade plan. But structurally, it's an ad for me. Look what we have. Volume, alignment, right to the top of this volume, microstructure, test, seller, stuck, location. This is like real estate, and then potential long. You must scale ahead of here. If you don't have the range, no bueno, no trade. But trade management, same thing. Is everybody tracking? Is this making some sense? The garden channel with hot potato? Oh, that's good. CMJ, when I add locations, and what I would do here is, I know if we fall under here, this trade's not going to be any good. So this is the location. Now I can't add here. I end up getting, like, for me, I'd be getting in here. That's just me because I'm chicken, right? And what it is I have structure. So I wait for it to come down. So I'm looking at a compound structure. I'm looking at this because of what it represents. And if I break above high volume and come back to it, and then in the developing structure, I have this little fractal that's on top of this. This is all supportive to me. So if I get in, and I can't take this trade, because of that, because I have to scale in front of the last micro high volume, which is right there. And if there was more range, it would be fine. And I have this, you see, so it doesn't work, except I still use it as a trade management thing, you see, but it doesn't. But I wanted to point this out because if this had more rotation in it, then you have structure, which is high volume, to come back to. Notice the reaction right here. This is the same structure. And it's actually pretty neat because if you look at this and you see this right here, that's where you'd be scaling, and you could see it. High volume in all fractals and time frames has very similar behaviors. Look at the microstructure. High volume, come back and check it. Up here, high volume, come back and check it, and you get a reaction. So if this was the same thing with maybe 6 points or something, not this, because don't forget, I can't enter here. So you got to, from entry to this micro node, that's what would qualify the ad. Anyway, but it's good that you understand, because if you understand market mechanics, we are the ones who need the range for risk reward. The auction just does its thing. It doesn't care about what we need. Once you understand the mechanics or the behavior, you can extrapolate this, and then it's just a matter of qualifying based on your requirements for the trade. But this is structured trade. It's a little bit more advanced, but it fits our structures. It's a matter of extrapolating it out. So anyway, this trade, feeling good, Lewis. Looks good, Tom. Limit order sitting out right above. Actually, it was right here, right in front of this liquidity. I said, I'll leave some for the sweeper, not so much. So this was the last place. And that was the end of that one. Okay. So I got taken out of it. Now it does this. Now I go, oh no, how do I get in? And so this was a problem. Now I have to go, well, how do I get back into this thing? Let me show you the short. Now, oh, I took one more trade here, and I took a stop on it. Let me show it to you. So my next location was settlement overnight mid. And what I had was this liquidity backing me up. And I said, well, if I come down to overnight mid, which was right here, I'm going to get long and mean revert. So this was because I was still looking at this point to this is a statistic and overnight mid. Let me give you the stats. So you just see what was going on. So at this point, I'm still thinking, well, all right, 72% probability to get here and about a 69% probability to get here. So I'm within, and this is over here now, before this thing. So right here, I'm still within to do this. So I'm still doing mean reversion. And I have this. So I see the liquidity, and I go, well, okay, that's supportive. I have a location. I'm at my settlement price, and this wasn't here yet. So this is what it looked like. And I'm coming down here. Now, I don't like picking a low of anything, but I had statistics, liquidity in the book. So I had the liquidity, and I think there was maybe something else here. So I see this. I see these guys get trapped. I get long, right? Right in here. And I'm going for this. Okay. Didn't happen. I didn't get my scale. My scale was right up here, right ahead of this liquidity. I'm just telling you, I take stops. It's not the end of the world. So long, looking for this and this. So didn't work. So I took a stop here. Now, since now I'm under this, my next location's the overnight volume point of control. This is where I turn around. This is because it failed. I come back to my volume. So the way I look at this stuff is here's volume, break, here's volume, the long. This was too high, the microstructure, but this is the developing volume point of control. So it's more significant. I'm looking for the market to be drawn back here, at least minimum. And then you got your VWAP and your mid. So I'm thinking at this point, we have a reasonable shot to come back here and maybe VWAP mid, that kind of thing, get some stops out. No such luck. So now, and this. So anyway, this is pretty aggressive selling. I see the absorption. You get 1,000 buy icebergs come out. Now, I should say buyers. We come back here. Now, where are we coming back to? Settlement from below, and let me take you one other microstructure. I'm going to show you this. I just want to show you how, and it's just one way to do this. I don't know. I'm not going to say there's no right way. It's how can you read it? So at this point, this is my high volume. So this volume failed, right? This one, I should say. This is the long, and it needed to clear here. It didn't even get there. There's my seller. There's my test. The last chance for this thing is to get above this here and here. No good. So this sets up a short for me to overnight VPOC. I'm still going down here. Hold on a second. So, and here's your test. See the test? Back to the volume. This sets up the short, and then I'm going for this. Overnight volume point of control, which has an 82% probability. There. And there's another one down here. Yesterday's low. So those are my targets. Now this thing, we have more targets. The overnight low, we missed the overnight high. It puts the overnight low on the table, and it puts the naked volume point of control on the table. So this thing is in a Acapulco cliff dive configuration, as you guys probably noticed by now. So now there's more trades in here, but let me see if you have questions and we can talk. We have structured trades here called the IB continuation trade, which is a mean reversion trade. It sets up at 9:30. I'm sorry, not a mean reversion, a continuation trade. I'm losing my mind here. And it actually sets up here. First one, there's a couple of these. But before I go on, do you have any questions? Cost stop, I can't take the time to look at that now. I'll look at it later. It's related to the stream. How are you guys doing? By the way, give it a thumb up in YouTube if you're finding this useful. If we get into real time, we'll do it. You know. So let's talk about. I don't see any real questions here relevant to the stream. This is the high volume, right? Right here. There's your seller. Now 9:30 right here is what's called the IB. The initial balance is the first hour. If we take it out, we have a structured trade in TraderLab. That's when we pull back, it's a short. Now you have to, like everything, vet this. And it's subject again to your skill set. And there's a couple of them here. Now here's the other piece. This made this, and I narrated this, I think, because I can't remember. I have to go look at the chat. I just don't remember. We have the ETH low. We have this naked volume point of control. This is the one I thought we did a test in the ETH, so that's why I was thinking longs early on. And, we took the longs. You saw those. Then it's turned the boat around and since we missed, see, here's the other part. We missed the ETH high. That was my target. If you don't take one, then the possibility is, and of course everything started pointing to the south side, you're going to take the other side. And statistically, let me find this for you. There's and again, past performance, not indicative of future results. These statistics are available to everyone in the Bookmap Discord TraderLab chat. And by the way, if you're in YouTube, you can use the link in the bottom there to access the chat. There's no cost. There's a 93% probability we'll take out either the first hour high or low. That's why I was going for the first hour high. And plus individual statistic of 69%, it would be the high. Now we know it's one or the other. So if you don't get one, turn the bus around, head south. So we're going south and we're going back to this. And then once we take this out and we take out the first hour's low, now we have a structured trade. What makes it sweet? We're leaning on against the ETH low. We're leaning against this, and we have our structured trade. So now that sets up, and I have extended target below, by the way. I'm going to point it out to you because I have no idea quite where we are at the moment, but it is here. And I posted this in TraderLab. 5206, not a trade recommendation. That's our extended target for the day. Market can do anything. It could go to zero. One never knows. Not a trade recommendation. But that's our extended target. All these are on the chart long. In fact, that level down there that I just pointed out, that's been sitting there since the last time we were down here. And I just lost my place. Let me come back here. Okay. Or did lose my place. Make sure I got this. 9:30. Okay. So 9:30 is the first hour low. It's right where it says IB low. We break low. This sets up, and that's called range extension. This is the volume. Microstructure. Let me show it to you before it gets back here. So you have this liquidity was here. 563 sell stops come out. Thanks for playing. Here's our alignment. ETH low, first hour low. This is your retail price. We broke below it. What does the market tend to do? Come back. If we don't get back above it, it gives us a good structure for a short. And now I'm going to take you to microstructure. There's this, by the way, this is the same as this, high volume. Notice the alignment. So in here is a little VPOC, if you will, or high volume node. High volume, it happens in all fractals and time frames. And the higher the volume, the more significant it is as far as having muscle. As it gets thinner, it's weaker. But if we understand what creates it, we can lean on it. And what we have here are compound pieces, alignment. It's a sweet setup for me. Let's look at it. And it's backed up by liquidity. So this is a short TraderLab. Now, volume point of control shifts down. Right here, this is now the new retail price. And this can be problematic. So I'm looking at this and I'm saying, well, we really need to stay under here. And this is now scaled. Okay. So for me, I'm just saying the way I trade, because me, I'm risk adverse. So what I do is I want to get risk neutral. It's like buying a ticket to ride or mitigate my risk. Sometimes I don't always get risk neutral. It depends on the number of positions I'm running, contracts, I should say. So, so let's just say in this trade, I did not get 100% risk neutral, but I got most of the risk off. And then I'm just looking for it. Now here, we see 1,000 icebergs, we have liquidity, and we have absorption. We also have absorption here, 900 icebergs. So I'm seeing sell stops coming out and absorption. And I posted this in TraderLab. I said, guys, absorption. This is a warning Will Robinson moment. Because what that absorption is saying is that sellers that are selling in the hole down here might get trapped. And the word is might, because nobody knows. This is part of the joy. But here's the liquidity. So I've got liquidity sitting here. I've got liquidity here. I've got my volume point of control here. And this is retail. When it crosses above, that kind of gives me the indigestion moment, because I need it to break away from here to continue. And it's now rotating in here. And I'm seeing absorption. So I'm letting you know, this is saying to me, be very careful, and maybe you're going to get squeezed out. So let's just see what it does. See? So I get taken out. I come back up. Watch it. Now you'll see. You'll find this really. Now I micromanage. I'm not saying anybody should do this. That's what I do. I come up here. This was my level. I come back to the IB. All it did was pick the stops out above this. This was my entry, right? It comes out. It takes the stops. What happens? We come up into this liquidity. 890 selling icebergs are here. I'm going, well, that's lovely. Here's my buyers, and they are absorbed. There's a stop sweep. What does it set up? Another short right here. Here's the micro high volume. And now this is called mean reversion. This is down trend, which means shorts only for me. I get squeezed out, which I anticipated. And by the way, it doesn't mean, it's not, the word anticipate doesn't mean predict. It means possible. Anything's possible. So I just put the trade on, try to get risk neutral, get close to risk neutral or whatever it is. If I get taken out, doesn't matter to me. I just put the trade out again. It's because of the time frame I operated. It's not anything else. Other traders are going to have their stops outside, inside. Here's yesterday's low. We're out of range. You could just, if depending on your risk again, you could have your stop out here and you could go to breakfast. Me, I don't, it's just my time frame. So this sets up a structured trade right here. This is microstructure, and this is called mean reversion. That's the mean. So right here, I have the pieces. Selling iceberg. Here's my liquidity. Buyers are here. Buy stops. Absorption. And I don't know until this. This is my trigger. Now, how do I get into it? I look for the pullback to test. So my short is here. My stop is here. My target is here for the scale and then continuation. It's the same trade. It's just squeezed out, back in. That's just one way to think of this. It's up to you. What are you going to do? So That's my last trade I took anyway. Where are we here? That's that. So now it's trade management. And we're current. So, you know, I think about it. Well, could I have done better? I guess, yes, I could have. The one thing I missed one piece, and it was at the high of the day. I had a level actually that I did not carry over from the ETH, and so I'm not going to shoot myself for it. But it was one of those things where I did not post it on my chart, and I would have been looking for a reaction. But the overnight high statistically was high probability. So I'm not going to say it was an error. I'm just going to say, because there's a lot of nuance to this. And in hindsight, it's, gee, I should have. And I think the shoulda is you just follow your plan. Because what I find, at least for me, is if I get out of, I mean, the long was the line for me for my trade plan. When it ran away from me, that's kind of stimulates FOMO. So as soon as I feel the emotions and the juice, I just let me move things here. By the way, I gotta adjust my position. Don't forget our target, not a recommendation, is this. So I'm trailing and I have an order. I'm going to be looking at this level here, not a recommendation. This is all auction based, so that's my my target. Hold on, guys. I got to move some things around here. I don't multitask very well, if you know what I'm saying. So I got to pay attention. Just make sure I'm not asleep at the switch, if you know what I'm saying. Hold on. I got to sort of. Now, by the way, I'm not too concerned. If I don't get all of this, I'll live with it. It doesn't matter to me. I'm past, there's no perfection or precision in trading. So right now I have no reason. I see absorption on the way down. I'm seeing icebergs, but I'm not seeing huge icebergs at the moment. Let's see. No, I have no reason. I'm just following the yellow brick road. I'm managing the trade. It's not a recommendation. And you guys know where the last position is I put on. So that's it. Let me see if you have any questions, okay? And again, I don't call trades, but I am showing you what I do. I'm sure there's better ways to do it, but until I figure that out, I'm just gonna do what I do. So how we doing, guys? Mike, the stop sweep, that's part of Bookmap. It you know, so let's watch here. Liquidity in the book. I mean, rotations are normal, it's not a big deal. 5206 is my target. What I tend to do, I kind of, when I have runners, and again, this is something that's really time frame specific. I kind of start out in a micro time frame, and as I get a sense of trend, I will shift out into a more higher time frame fractal. So now I'm going to sit through more counter rotations if they happen, and give it more room, because now I've pulled the microscope out, from the scalp area with the scalpel. I basically enter in the shortest time frame I can read and create structure, and then I pull that microscope out into a telescope kind of a thing and get further away from it, so I can go for more macro sized targets like this. And that's really where the pay is. Now, these days are outliers, don't forget. Most of the time, we're not trading these ranges. We currently are, but most of the time, the market's not like this. So the plan needs to be, I think, kind of adjusted. But when you're developing trade plan, the first piece is to understand market mechanics. It's really based on more of a shorter time frame. because you learn to read the market in a short time frame because it repeats all over the place. All this behavior, you can read it, you can quantify the. Now I got all these absorption things going on. There's a lot of absorption, a lot of activity. I'm not going to adjust that at the moment here on this. This is my streaming computer. I can't. I don't trade from this. Can't trade from it. Got. I would have to hook up to a different data setup to trade. When I go like to Costa Rica, for the winter and that kind of thing, I do trade off it, but it's hard. Okay, so I'm watching this. If you have questions, post them. I should be done with my trade here pretty soon. Just go on from there. Absorption buyers, volume 120. Well, ET1, good luck with that if you're going to buy calls. I guess if you're going to take a shot, that's a smart way to do it. But I mean, because the worst that can happen, as long as you're buying them and you're not, you got to be careful. Like if you're going to sell puts or do something, might not be such a good idea. I don't know. It's not a trade recommendation. It's not my thing. This guy pulled. We want to be aware. I'm seeing some selling absorption here. These buyers, or actually, yeah, some sellers right here. That's absorption. What that's showing, the absorption is showing us the passive side. So even though you see buy delta here, it's showing us, because in the order book, there's limit orders sitting in the book. That's what you see over here. So if the buyers are buying, if you will, and then the sellers step into it, and which side pushes which side out, you see. Well, the sellers are still in control here at the moment. So it's very useful. That's why when we see this here, it also can indicate the possibility of a rotation or reversal. Now, who knows, right? That's the joy. I got to pay a little attention here, guys. So right here, from a trade management point of view, this is not a bad place, and it's not a recommendation. I have to say that. It's kind of required to trail because the buyers were absorbed. They're selling interest here. So that's a place that if I get back above this absorption, then they're going to squeeze out everybody in here. Not everybody, but they're going to squeeze. This is a trade management process. So anyway, you know where I'm going. Right? And from the IB low, wherever this thing is, I don't remember anymore. Yeah, this is the last short. So I'm good with that. This is TraderLab. So let's watch behavior. Notice the algo in here. So it's very easy to get taken out, and I'm going to tell you at this point, I'm okay with it. Absorption on this side. So now you want to watch the behavior. We had sellers here, they got absorbed. You had buyers there, they got absorbed. So you want to watch this. It's like a bracket. So, and if you come out here, you notice that volume dried up out here. This is a low volume node. High volume is here, says HVN. That's really our resistance. So this is a good place, in my opinion, and not a recommendation to have a stop at the moment. And we want to stay under this. That would be nice. Because these buyers, so we had sellers here, they were absorbed by this buyer, and we're below them. That's good. Selling iceberg, and here's buyers on this side. So we got to watch this right here. Now, the other part about icebergs is when he's done, now he's pulling away. What, a chicken? So we want to watch this behavior here. If he cancels, it opens the hatch. We all know that he's sitting here if you have a high tier order flow tool that reads market by order data because they're tagged. That's MBO data is really terrific. It's available through Rhythmic and I think CQG and maybe a few others. Let you see the orders. Look at them drop down. All right, change his mind. No, I don't want it. I really do. This buyer failed. I'm flat. Not a recommendation. Anyway, sorry about distracting you guys with, my trade. How we doing, guys? How we doing in YouTube? This is auction market theory. This is how the market works. Nothing's perfect. Perfection doesn't exist in trading. It's the best you have is maybe. Now, I don't know if this is the low of the day. I can't pick the low of the day. I haven't figured that out. I let somebody else do that. But my trade is done. So I'm okay with that. The IB low was I got short up here, so actually it was above this, I think, on the push through. Yeah, it was up somewhere up in here. I have to go look at my thing here, but close enough. I can't even remember. I might have been. I don't know. I can't remember. I have to go look. It's not worth our time. Let me look below here and see what we got. Well, we got this, we got this, we got that, and we got this. For me, finito, time to order in the sandwich, doesn't matter. Now, it is important what happens in this area. This is a higher time frame version of that, right? And this is a really higher time frame version of micro, high volume. If you go in fractals and you think about the market that's like, and I always describe this as Russian dolls. It's just the way I relate to it because when you think fractals, and what fractals are rotations inside of rotations inside of rotations. So when I get into microstructure like this micro high volume is the same concept. Think of Russian dolls. This is the little one. It's a trigger, but it operates the same way. We break low, we come back and check the volume. That's your short. Then you're below this, which is a higher time frame fractal. That's your high volume here. So I'm inside of these things. And down here is my next level of high volume. That's my target. Are these levels updating here? Hold on a second. I show the current low around 5.5 maybe. So this is not quite accurate. I wonder what's going on. Cocobolo, I was short twice out of the IB low. I took the first one, got a scale, got taken out on a trailing stop, fine. Put it back out again, and so there was two of them there for me in the way I operate. Other traders might, like I said, some trade. Oh, there we go. It's updated. So anyway, this is where I'm done here. Let's see, what is it doing, by the way? See what I'm saying? This is how the auction works. Now, this doesn't mean we won't go lower or test this low later in the session, or it's the low of the day. Not my job, not my skill set. If I had the skill, I would, but I don't think that's real. I think that's fantasy. Everybody who says they bought the low, sold the high, and all this, Well, you guys, if you're over 12 years old and been in the business more than 20 minutes, I think you know kind of what that's all about. But yeah, trading is real, and trading is random. And the idea of the auction, the reason I use the auction is that indicators never did it for me because I was always behind. And what is the right way to? I mean, if an indicator crosses over and says and gives you a buy, or the quote RSI is oversold, you know what I mean. And what are you going to be doing? The market's going down. Are you going to be trying to buy it? Well, I found even after building trading systems and working on systems because I managed dollars for many years, and it was too hard. And I was a position and swing trader, so I didn't, there was no day trading early on. Um, it just didn't work. It worked enough, but it just would break down because what you were doing is I'd run these simulations and go back and take a chunk of data, and it was called walk forward testing if you're familiar with systems, and it would always break down because think about it. And how can you trade yesterday's market? In a way, we are trading yesterday, but let's talk about last week, last month, you know, and then take a chunk of data, then do walk forward testing. So you're carving out like a month's worth of data to run testing on. So you optimize on a data set and then walk it forward with another part of your data set so you can see. And then so you're constantly like every 2 weeks, I think it was, or I don't remember because I stopped doing that a long time ago. But it was in the mid 80s or late 80s, I think. Don't remember. But something like that. Anyway, and then when I got exposed to market profile from Peter, Peter Stoudemire was a grain trader at CBOT, and he came up with this thing and eventually got licensed through CBOT. And when it became available, I was one of the first people, probably. He started something, and it was very expensive back then, but I saw it, and at first it was like, what happened? Somebody step into a buzzsaw because I'd never seen anything like it before. But it made a lot of sense to me. The concept of the auction always made sense to me before I knew what it was called. And my trading at the time was developing and it had auction-based mechanics to it, but I did not know that's what it was. So I was finding behaviors that I was beginning to build on for trade, setups and trades and things, but I didn't have the full picture. And then once I got the full picture from him, I made a mess out of it because I decided I did. And I'm very happy to tell you this because this is just the way it was. I mean, I share my story. And when I started trading as an off-floor trader, it was all floor traders. There were no off-floor traders. If there were, because we didn't have the technology until CQG came out with its TQ 2020. Before then, there was very little. Early on, there was something called an ADP Comtrend, which I think was the first, it's so long ago, I can't remember, but I think that was the first machine. And you basically, data was impossible. So you ran an extension cord up to Massachusetts, and this is from the exchange in Chicago where I was sitting. So you basically ran a phone line someplace in Massachusetts, I can't remember. But anyway, that's just a long story short. But then multiple time frames and all this came in. And then I shared an office with George Lane, who created stochastics. So that was exciting. That's what sent me down indicator world and put that together with market profile, which is time-based. There was no volume back then. So that's kind of where I went. So you run off in these directions and you think I got it now. Not so much. How many times have you gone, yeah, I got it, and then you don't? And a lot of traders are still doing that. I came up with a term, I call it trader groundhog day, because you get excited and you go, I got it now. And then you put it into practice and it breaks down. And the reason is it doesn't have an edge. It's random. So gamblers win, they walk out with cash. Isn't this interesting, guys? No, I can't make this stuff up. This is kind of what blew my mind about auction market theory. I started seeing stuff happen and I went, why? Why is it doing this? And now I can't predict anything, but this is why it's a target. And it's sure it can keep going. And if it came back to this, I also would use it the same way I use other structured trades. I'd be selling it. But we're above it. I have no trade. I hope that's making some sense. Please give a thumb up in YouTube if you're getting something out of this. Also, remember, there's a link in the bottom of YouTube if you're interested in downloading 60 PDFs of these structured trades that I'm sharing. These are structured trades in multiple time frames or fractals. I don't use the clock, but you know, I used to. I don't anymore because the market is not based on a clock. It's based on the interaction of the participants. That's really what creates the market, not our little clock that says 5 minutes, 10, 15, 60. It's not that you can't use time, but when you put a collar around something, you're actually restricting it and distorting it. And again, it's just an opinion. And believe me, been there, done that, so I don't do it. You have to find what speaks to you. And a lot of this has to do with your beliefs. What do you believe? I believe certain things when I started in trading, and believe me, they were wrong. But because I had belief, I thought it was a matter of me fixing it, getting it right, persisting. So I accepted beliefs and then built things on top of beliefs that were not in alignment with the business. So I was trying to get this business to fit something I believed that was defective. So if we have a defective belief, we're going to look for things that say it's correct because we believe it. We're not going to look for the things that maybe disprove it because we're on the mission to make it right versus finding out if it's wrong. And what's right or wrong? Well, statistical probabilities is the only way you determine what's right and wrong in this business. I didn't understand gaming early on. I just thought it was optimizations and numbers. You know, you come out with wins, percentage of win, this, that, and all this kind of jazz, all the numbers. So I played with the numbers, but I didn't understand that the process was defective. So I'm just sharing that. So a lot of our problem as developing traders is that we may be chasing a process that actually is not in alignment with this business. And if you're not extracting metrics to determine if you have an edge, then you're sitting potentially with the gamblers versus sitting on the house side of the table at the casino. And again, I never thought, I remember people used to say to me, "Oh, you're a gambler." I said, "No, I'm not. I'm a trader." Well, yeah, I am. But the difference is casinos are gambling houses. And in our business, we accept risk in order to generate a potential outsized return in exchange for the risk and the liquidity we put in the market. And if we have an edge over time, like the casinos, we have the opportunity, if we can execute a vetted edge, to extract the dollars over time from the gamblers. Works good for the casino, so there's our business model. So now we know what works. But unlike the casinos, who are not attached to the outcome of any individual hand, we live and die emotionally on the next trade. That's a big problem for us. So how do you get your brain and your emotions under control? If you have statistics, it gives you courage. If you know when you mess with a trade over time, that causes you to lose, even though randomly it might save your butt a couple of times here and there, but that will take you out of the business. It's very hard for us just to let the chips, as they say, fall where they may. You've heard that term? Well, that means just letting it happen. That means if you have a structured trade and a trade plan, if you put your trade on wherever it is, and you know it has an edge, then you have to let things do whatever it's going to do. This was a good trade, right? This, I can't make it up. And this is auction market theory. And it's not hard to understand how the market works. If you're a shopper, anytime you go to the store, you're actually in the auction. You're participating. If you go to store and you perceive a product is on sale and it's too low, you'll buy it because it comes back to retail. The other side of the coin is if the price gets too high, the buying dries up, and then the price is going to rotate down to retail, so it attracts the buyers. And then at retail, a fair price, everybody does business. That's what creates high volume. This is a high volume price that we left behind previously. There's a couple possibilities. We come back and check it. Maybe it's too low because it was a big retail price in a higher or intermediate time frame. If it's too low, we can then rotate away from it. So it's kind of multidimensional. If this is not too low, then we can come down below it and return to it. Or, let me come back. Or if this is too low, retail price in this, think of this like your big box store, higher time frame, we can come back here and check this price. Is this price now, is it really too high? If this is too low, we can come back here. You see? So we don't know. So is this too low? This would be where we might come. And this is a multiple fractal, potentially a reversion trade. It's not a recommendation. Me, I don't take this long. Other traders will. Me, not so much. Doesn't matter to me. However, let me give you some thought. All the big volume is done. Typically, we get into low volume this time of day. Just something to think about. And this is not a long I would take. Structurally, it's a long if you're a counter trend trader. Considering we're outside of yesterday's range, considering we're below here, and now we tested this, this does set up this to this, or this back to this. And this is really the way that you'd want to go. So for me, I'd be looking for the short because I want to be in alignment. This might set up the short. So I'm just saying, it's now this situation here, if we were not out of yesterday's range and falling out, doing the Acapulco cliff dive, this would be counter trend. So if you got long here to here, that's counter trend. I prefer not to do that in this configuration. 1,700 selling icebergs here. 1,400 buying. As Dirty Harry used to say, do you feel lucky? By the way, thumb up in YouTube if you're getting something from this. Leave comments. I also want to invite all of you to come to the Bookmap Discord TraderLab chat. There's no cost to become part of the TraderLab community. It's made up of serious traders. It's not romper room. It's about building a business. The business of trading is very much like the casinos operate, so that's a successful business model. So the objective in TraderLab is to use structured trades that you can vet and reverse engineer. There's 60 PDFs that are available, as well as a library of webinars. Some of them are up to 4.5 hours long of real-time narration. These actual things. So you would be able to look at all those. That's all available at no cost. Plus, the community really is, I think there's nothing quite like it. And I don't see any reason why anyone should have to pay to be, to subscribe. Unless, of course, you find value and you want to do that. But I think in your journey, you can take a lot from the TraderLab. And the thing I suggest is you come to TraderLab, there's a primer webinar. It's got about 28,000 views or so. And when I'm not a vendor, there's no course, there's no cost. Bookmap asked me, a couple of years ago, would you do a little streaming for our, and it really was just sort of, yeah, okay, And I went through a terrible time in my development and there was no information. You guys are at the opposite end now. Anybody can go on the internet and do whatever. You guys know already. You've already been there, done that. I go on YouTube and I fall out of my chair because I need a shovel for most of it. And there's also some good information out there too. It's very hard for developing traders to sort. How do you differentiate? We're all looking for the same thing. We all want to get better, and if we're not profitable, we want to get profitable, of course, right? So And I always say this, I know early on when I was trying to figure out what's going on, if somebody said it's $10,000, come to this 1 week seminar and you'll have an ATM in the basement, wouldn't you have paid 10,000 to create financial independence and your own business? That's nothing. Think what franchises cost, you see? So it's nothing. Uh, so, but we do pay in a lot of different ways. And today you can pay in a lot of different ways and get nothing for it. So, depending on your experience and your objectives and what your goal is, whether this is just a part-time gig or a hobby or whatever. But if you want to be in the business of trading, I think TraderLab is a great place. And the thing to do is if you come to Bookmap Discord TraderLab chat, use the link in the bottom of YouTube. Remember, no cost. Ask a question. Ask many questions. Ask the participants. Why are they there? What has it done for them? What do they wish they might have done differently, not only in their development, but also in TraderLab? If they could do it over again in TraderLab, what would they do? What would be the first structured trades that they would reverse engineer and make their own? What are the pitfalls of any process? Because they all have them. There's no plug and play. There's no mechanics in trading in the sense of, oh, it comes to the mid, we always sell the mid. That doesn't exist. It doesn't exist in the real world of trading. It exists in alignment with what's called context. The context is down. So that means for me, no shorts. It does mean if I'm a counter trend trader, a long back to here. Can you see the logic? So you need to know before this happens whether you'd be taking this long. Yet, why might I know that the possibility, and that's all it is, exists to go from here to here? Well, I already explained it, right? And that is maybe, and this is all you got in trading, maybe too low. Let's go check the price. We checked this one, higher time frame. Maybe too low. What's the last place? That's retail, high volume. Here. So this would set up too low price check, mean reversion. It is counter trend, and it is a structured trade in TraderLab for advanced traders. I hope you can see it. I don't call trades, but I kind of like to lay it out there for you to think about. Are you getting something from this? Please give a thumb up in YouTube. Drop a comment. If it's an iceberg, Mike, icebergs are just kind of a piece. They operate on a different time frame, different agendas. Like we see 1400 here, but we see 1800 there. It's not a buy or a sell. You see 1400 here. This buying, we will assume, is short covering. We see the absorption. We see this. How do we determine where the high of this rotation might be? First of all, we don't know. So let's take that off the table. What I do, now this trade is not my trade, but it's a TraderLab trade. If you're, again, counter trend. For me, there's so many trades. I got to tell you, there's so many trades. I don't feel compelled. I see a counter rotation. I know where my target is. It never has to get there because we're out of balance. And I had selling here. These buyers in here got run over. I have liquidity stacking back here again, which is in alignment with this. So if you took a counter trend trade, you got to be pretty aggressive with your trade management. So that's why I don't call trades because I'm just like everybody else. There isn't anybody who trades who doesn't take stops or get spun around. That's just what we do. Everybody wants to look. If you want to look good, this is not a business to look good. It's very easy after the fact to look good. You can see that anywhere out on the internet or in any chat room, where someone says how obvious it was. Well, nothing is obvious. It's random. We can get a sense of something, but we don't know what it'll do in any kind of microfractal. Like this right here. This buyer was absorbed. by a seller. Icebergs are sitting here. So these guys want to sell. I've got stacking liquidity here. This might give me a counter rotation, or I'm going to push through this, one or the other, right? Here's my sellers here. Are they going to get stuck, or are we going to break down? So subject to how you operate, you would just be working a trailing stop subject to your plan. Sellers got stuck here. Buyers, sellers are here. Sellers are here. If I clear this and these guys, who knows, then your stop would go under here. Not a recommendation, it's just the way it works. And where you're trying to go, and there's more sellers here. So we got a lot of icebergs operating here into these buyers. So what you see here is buy stops and sellers absorbing the buyers. Look at all icebergs are very active, okay? So, you know, those guys, they're selling. And where are we trying to go? Up here. Is it going to get there? No clue. But this is what's called, it's a mean reversion type of a trade against this volume. So it's higher time frame volume, potentially back to this. And the idea of this is you got to be managing this thing aggressively. And I would assume you get taken out of it. You know, it's not a big deal. You know, if you would be out of it. So if depending on your time frame. For me, if I took the counter trend trade, I'd be out of the trade. You know, so you know, it's not the end of the world. I don't know what it is, 8 points, 10 points or something, not including scales. I can work with that. But again, it's not my trade. But the TraderLab gives you the tools for you to understand how the market works. And you, if you're in TraderLab, would know not what'll happen, but where it might happen, and you would have a plan ready for it. If I know this is a target, potentially, again, coming down, and that's where my exit was, right in front of this, why would I get out there? Because I know market structure and mechanics. It could also just keep going. And I go, oh, look at that. I follow my plan. Then I know if I see absorption and I'm at a location, there's my absorption, there's my liquidity. This is a piece. You can isolate these pieces. And I see my buyer. These guys are stuck. They're absorbed. There's my buyer. Here's my pullback. Here's my volume. This is a potential long. Your stop's going to be under here, and you're going for that VPOC up there. You're trailing. You come back here to this volume. If it's too high, and who knows? I don't know. You're out. And there's more. I mean, you could also be looking to take the other side of this and be selling it. I don't have a short here. And it doesn't mean it won't come back and take this out. And it can. So I don't trade in traffic. I just sort of try to get in alignment with higher time frame and developing time frames, and then execute in microstructures. So I can read this. I don't know what it'll do. I mean, there's all kinds of nonsense goes on in here. What I do know is this is the highest volume so far today. The nature of this behavior of the auction is to check volume in the higher time frames and then revert back to the volume in the developing time frame. And it doesn't have to. It could just revert to the micro volume in here. And that's as far as it goes. You could see a little triggering structure right here. You see this? That's a triggering structure. Another way I use this, now I'm not shorting it. I'm just saying, if I was scalping it, it would be a short. But let's say I'm long, which, as you guys know, it's not my thing, unless I'm counter trend. This is a trigger. So if you're hanging out, your stop's under the last seller here, I see the absorption, warning Will Robinson moment. I come back up. I have absorption again. I get my seller. This is a trigger in microstructure. I test the high volume. You could see it right there. This is a short. If it's in your plan. Remember, I'm not calling trades. I'm helping you see that there is fractals. The behavior that created the reaction for the long from here is the same behavior that creates the short from here. And it's not a short. I'm just showing you behavior. Here's another thing. Suppose you took the long and you're hanging out here and you're doing whatever you're doing. This is a sell trigger. If you didn't get out trailing, I trail because I'm kind of indifferent in the sense of I'm going to hold until it gets here. Well, I don't know if it's ever going to get there. Might not do it in my lifetime for all I know. So I have to follow this. If I was not trailing, and that's what I do, this is a short trigger. Now, I have choices. Here's the choice. If I'm long, the trigger gets me out. If I want to scalp it, it's a short here, which is not what I would do. And it doesn't, because I already hit my target. So if I'm going to get involved, it has to come further out so I have range. So I have no trade here. But this trigger would get me out of my short if I wasn't using a stop. I use stops, and I often pay the price of getting taken out on a counter rotation, and then it continues. And I'm good with that. And why would I be okay with that? I'm not attached to the outcome of any one trade. I just follow process, and I just have confidence that there's going to be another trade around the corner. Just me. You'll find where your groove is, if you know what I mean, your rhythm, what fits psychologically. And that's why you can't plug and play and replicate what anybody else does, whether they're successful or they're full of baloney. You have to, I think the way to do trading is to kind of see what works in general, in a broad stroke, and then break it down into pieces and find where it fits for you, where you find psychological alignment. That's why you can't just go and do what somebody else does. Otherwise, we'd all do it. Who's that great successful trader? Let's find one, and we'll just do what they do. Doesn't work, right? And if you've tried that, you understand it. And what I do won't work for you either unless you put the work in to kind of slice it apart and find the pieces that resonate with you. And that's why, you can come to TraderLab, download those 60 PDFs of structured trade. You guys, if you've been following the stream, you know what they look like. They're circles, arrows, all that kind of stuff. And then watch the webinars, join the community, ask questions. The idea of the TraderLab is to help traders build the business, to separate the nonsense from, the fantasy from what trading is. Trading is not this, it's not easy. It's very counterintuitive, and that's what makes it very difficult. But you see what we have, counter rotation here. So I'm just saying. So for me, and again, I don't trade counter trend. What I want to be thinking about is the thing I have to be thinking about is this might be it for the day. I don't know. But we also, in this condition, this is possible. So I want to be conscious of this. And we may, if I get range, rotate. And all I would be doing is working the rotation. And it might not set up until later, in the afternoon, when more volume comes back in. Typically, over this time of day, we get counter rotations. I built out a counter trend trade called the IB failure, which I don't think we're going to run it. In fact, it's not qualified today, at least for me, which would be a mean reversion trade where it's a long when we come in here. And it used to happen around noon Central Time when all the locals, the floor traders would all go to lunch. The liquidity would thin out. So there'd be less paper orders running through, and it'd be easier for the market to move. So if the market was stacked in one direction, it would create a counter trend or short squeeze. So in this situation, not today, but in this situation, it would be a long if we crossed over here. Not, but I'm just saying. Anyway, final questions. So got about 5 or 6 minutes. So look at your questions in the meantime. Please give a thumb up in YouTube if you got value for this. Remember, these streams are available exclusively to review for TraderLab participants, plus a statistics on the probabilities of targeting, etc. Past performance, not indicative of future results. You got to reverse engineer, verify, quantify, examine, reconstruct, deconstruct, make it your own. Pick one structured trade in the TraderLab. Ask other traders in the TraderLab what is their favorite structured trade. And if you only need one, and the reason you need one is to create a template of process, you need to prove it to yourself that you can do this, and you do it with one structured trade. Because by understanding when it fits, how it works, because none of these structured trades are all the time. They are actually qualified based on the condition of the market. So you need to understand the condition of the market to know what to deploy at what time. So it's like your first date, in life. Once you do one, maybe you're better for the second one. But the first one, probably a little nerve-wracking if you can remember that far back. I can't, but that's besides the point. These are actual trades I took, and I just took screenshots. Other ones were just things I did screenshots. And initially, I just threw, the other traders were asking me, what are you doing? Because I would post, like I do in the Bookmap TraderLab chat, here's what, here's what I'm doing. Here's my target. Here's my entry, blah, blah. And, what are you doing? So I went, well, that's what I'm doing. It's a long, So anyway, all these things are available. You can download explanations. These are trades, Target. You can see the short was here. So anyway, neither here nor there. Anyway, a lot of these trades that I'm talking about here in the stream, all of them are in here. And this is not a trading course. You can select one of them, just one. Make it your trade slave is what I say. Because once you get it, you're going to differentiate yourself and you do the work and you go through the wear and tear. Yes, it's work. You have to roll your sleeves up and there's no shortcut. It's kind of like you want to play in the major leagues. You got to start down with, whatever that is, minor, and then you work your way up. And it comes with an understanding of how the market works. And then look at this. Isn't this interesting? Absorption. Now this, nothing to do, okay? But you can see the high volume node. This is the outside edge of this distribution. And remember where the targeting is. So again, but I just wanted to show you a way to think why the market might come back here. And at least if you got long out of here, you'd be risk neutral. And then you're managing the trade, you get taken out, or your stop is back at break even going for this. So you guys can watch this because this is the target. And the market never has to get there. Again, trade management, that's a personal choice and time frame or fractal decision that has to do with statistics. So you guys can watch and see if we come here. But this is the structural target, not a recommendation. I hope you got something out of this. Please give a thumb up in YouTube. Leave comments. I always appreciate them. Subscribe to the channel. And remember, there's a lot of additional no-cost education available to all of you. You can access that through the link in the bottom of YouTube. It's stocks, options, large cap, small cap stocks, trading with a high tier tool like Bookmap, how to use order flow, crypto, market make behavior, algorithmic behavior, stops, icebergs. Of course, TraderLab, a lot of additional streamers who kind of take their own viewpoint on the market and might give you some useful ideas and a lot more. In the TraderLab, as always, TraderLab, thank you for being who you guys are. I don't think there's a better community. There's no cost. And the thing about TraderLab is our senior trader has over 54 years. I have going on 45 years of trading, both professionally and now retail. We leverage our collective experience. There's a lot to do to become better. And nobody can do it isolated in a vacuum. You need to be around other traders who understand what you're trying to do and who can help you. That's what the trading community of the TraderLab is about. It's leverage. Remember, this is our target. Please give a thumb up in YouTube, subscribe to the channel, use the link in the bottom of YouTube if you're interested in downloading these 60 PDFs of the structured trades and having access to these streams. They are available exclusively to TraderLab participants to reverse engineer, screenshot, circles, arrows. You build out a library and have a binder of trades. And then each trade is isolated. You have statistics for it. How do you manage your emotions, your fear? Remember, Jekyll and Hyde. How do you manage Hyde? You manage Hyde by even though we're in a random environment, you want to get control of your emotional state by having statistics that you have vetted that say under certain conditions, when X happens, there's X probability that you'll get risk neutral and a probability of the market going to a specific target based on market mechanics and how the market works. That's TraderLab. Please give a thumb up on the way out in YouTube, and thanks again for visiting TraderLab. Remember, this stream's available exclusively to TraderLab participants. If you're interested in this and a lot of other neat things that are exclusive to TraderLab, and there is no cost, of course, for it, come on over, visit. I think you'll have a great time, and maybe you can take something away that'll move you forward on your career path. Thanks again. Thumb up, please. Helps the stream.